Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 755A, and today's date is September 1st, 2015, and the title of this episode is Russia Drafts a Bill That Will Eliminate the U.S. Dollar from Trade. Let's get right into the economic collapse financial news. Let's head out to Greece right now. Now, the U.S. government, the central bank, IMF, ECB have been pushing the propaganda that everything is fine in Greece. Unemployment's fine. It's improving. They're in recovery. They're getting the bailout. And we're seeing that this is all not set in stone. I mean, the Greek international creditors, they might delay the first review of the country's bailout. They're waiting for the elections, the snap elections, on September 20th. And just in case it wasn't clear, the Greek sovereignty is now entirely conditional on the Greek people voting precisely as the Troika requires. And for a continuation of the austerity terms for this third Greek bailout, the officials would like to stress that any new government that emerges from the month's poll must meet the current bailout terms in order to release the third tranche of their bailout. And they're warning, if they do not comply, the bailout will not be coming. Actually, I think maybe they should just do without the bailout. Maybe they should get and remove themselves from the Eurozone. Maybe they should go and create their own currency. So basically what they're doing is they're saying, get a government that agrees with what we're doing, who cares what the people say, and everything will be fine. Well, we know everything will not be fine in Greece. Basically, right now, the central bank is in control of Greece. The people have lost control. The government absolutely has no control whatsoever. I mean, in Greece right now, since July, 17,000 more jobs were lost. This is the worst result since 2001. In addition, another 40,000 people went to work part-time from full-time with a reduction in salary. Industrial production recorded a drop in July. In addition, capital controls have resulted in record job losses, according to data published on Monday by the National Confederation of Commerce and Companies. And we see right now economic sentiment is basically imploding on itself right now. This is not working out. The Greek people, they're suffering under the central bank. But again, the central bank doesn't care. You have to understand how they work. Their product is debt. They have no allegiance to any country or group. The allegiance is to themselves. And if things don't go the way they want, they start war. Just like all of these countries having this mass amount of debt, things are not going the way they want. So when things don't go the way they want, what do? They start war. Because when their system's coming down, they don't want to be blamed, so they have to blame something else, and they'll use war to cover this up. German unemployment. Their unemployment rate has ticked up. Now it's at 6.4% in August. The agency reported that there's about 23,000 more people that are jobless in August over July, and that brings us to a 2.796 million people out of work right now. The Eurozone factory growth is lower than expected. The index came in at 52.3 in August. They were expecting 52.4. So we're looking at this right now, and we're seeing that the Eurozone is falling apart. Greece is still falling apart. And within the Eurozone, we see Spain, Portugal, France, Italy, spreading to the UK, Germany, all starting to crumble apart. And this will spread, and it will get worse and worse as time goes on. Now, we understand the stock market just took a major dip again. it created a crater of 470 points down. And we're starting to see this quite a bit now, where we have these incredible highs where all of a sudden the market is up by 400 or 500 points. And then all of a sudden the market drops 400, 500, 600 points. Well, we saw this back in 1929, going through the summer months of August into September. We saw it in 2008. And at this point, we see that this whole market is about to come down. We understand the plunge protection team, the high-frequency traders, they cannot keep this thing propped up for long. Eventually, the real market will overrun the inflated fake market because they will not be able to keep up with the selling in the market. No matter how much the Fed creates and gives to the plunge protection team to purchase stocks, they just can't do it fast enough. And we've seen a glimmer of this when the market dropped, I think this was August 24th, by 1,000+ points. They were unprepared and they couldn't keep up. Well, when this market comes down, it's going to crash hard. It's not going to do it by 400, 500, 600 points. It's going to come down really hard. They will lose all control. We understand in Asia, the markets were down. In Europe, the markets were down. China right now is trying to stop what is happening. Now, can they stop this? Most likely not. And when we look at this, I know the corporate media is out there. They're blaming everything on China, just like we expected. They were going to blame this on another country. But we know this was coming for a long time. We've been following this all along. And the cause of it is the central bank. The cause of it goes back to 2008. Nothing was fixed since that period. All they did was prepare for themselves while keeping everyone in the dark, pretending we were in a recovery. And right now, China, starting October 15th, banks will have to hold the equivalent of 20% of clients' foreign exchange forward positions with the PBOC, where the money will sit frozen for a year at 0% interest. Obviously, that will drive up the cost of taking speculative positions, which the PBOC hopes will help narrow the gap between the onshore and offshore yuan and bring down volatility. It would also remove lots of speculative trades that aim at short-term gains, as the reserves have minimum lockup period for 1 year. And this is coming from Stan Becky Liu. So we can see at this point that China's taking precautions. Now, I don't think this is going to work. I think this whole thing is coming down. I think right now China is trying to delay as much as they possibly can to unwind out of the treasuries, to position themselves to come out of this ahead. Remember, they've been purchasing a huge amount of gold. The U.S. right now is a consumer-based economy, and there's nothing to support anything here in the United States. The whole thing was propped up by the central bank. This economy right now is not a people's economy. There's nothing here where the people have driven this higher and higher. It's all the central bank that has created bubble after bubble after bubble after bubble, and they're all ready to pop. I mean, it took 7 years to get to this point. It will take 1 day to bring the whole system down. This happens the same way every single time. We see here in the United States, U.S. manufacturing. It has plunged to 2-year lows. Market PMI printed at 53 from 53.8. We're seeing a plunge in the employment subindex. Market notes U.S. manufacturing sector continues to struggle. And this is on the heels of the Dallas Fed weakness with their manufacturing. ISM manufacturing printed a disastrous 51.1 versus the 52.5. The lowest since May 2013. New orders plunged to its lowest since 2013. We have these massive inventory buildups, which have saved the world for the last couple of years. But guess what? No one is buying them. And when they unravel, guess what? The whole thing comes collapsing down. This is what is happening right now. Now, what's funny, in the corporate media, they're telling us that construction spending is way up. Oh my God, it grew by 13.7% year on year in July. And it has only grown at faster pace than what we're seeing once before. This was the first quarter of 2006. But what's very peculiar about all of this is that construction spending is surging, but lumber prices are collapsing. So something is not right here. Something doesn't make sense once again. The statistical numbers that they're putting out and reality are contradicting themselves. So what we're seeing right now is this whole thing is falling apart. I mean, we're seeing a lag. And we've seen this picture before, back in 2008. And it did not end well. Because the construction, the builders are saying, yes, we are building. Lumber prices aren't going anywhere. They're actually falling. And the exuberant construction industry is jumping on the Fed-induced signals of recovery. And guess what? We are not recovering whatsoever. We are starting to see, and we have been seeing, mass layoffs in the banking industry. I mean, let's review some of these numbers. I mean, HSBC, they're going to shed 50,000 jobs. RBS, 30,000 jobs. Barclays, 30,000 jobs. JP Morgan Chase, 5,000. TD Bank, they're already warning, yeah, we're going to be cutting jobs. Bank of America is going to start closing their branches. JP Morgan Chase, closing branches. They're disappearing by the hundreds. We see Target is laying off another 235. Penn West Petroleum, 400. We're seeing John Deere, 180. We're seeing Hanergy, Thin Film Power, 2,000. We're seeing continuous layoffs. But they're trying to convince us that unemployment insurance, initial jobless claims, are continually falling. So again, something doesn't make sense. What is going on here? I'm going to tell you what's going on here. The government central bank statistical numbers do not match up to reality. I've said this before. Each one is going their opposite direction. And it's becoming clearer and clearer that we are not in a recovery. We are in a collapse. We're seeing that 2/3 of the global PMI has deteriorated in August. We saw a deterioration in 19 of the 28 countries, suggesting the global economy is now entering a recession. I don't think we ever left the recession. We never left the recession because we had the central bank basically create an illusion that we were out of the recession. But we were always in the recession. Actually, we're heading into a depression now. Global trade right now is in a free fall. While everyone was looking at China, South Korea put out their export numbers. And they reported an unprecedented 14.7% collapse in their exports. Far worse than a negative 5.9% consensus estimate. And more than 4 times worse than July's 3.4%. So what does this show us? Global trade right now is in a complete free fall. So putting South Korea's plunging trade in context, this was the worst monthly decline since August of 2009. Yes, when we were in the Great Recession. So back then we saw an 18.3% tumble in imports, the biggest drop since February in 2008. Now, Christine Lagarde is out there, and she's talking about the global economic growth, and of course she's done her calculations once again. And we know the IMF is always wrong. And they are now lowering their expectations once again. And they're saying that the global economic growth seems a lot weaker than they originally thought. Well, she's going to have to keep and continually come out with new and newer numbers, letting us know that this whole global economy is continually getting weaker because it's not going to get better. So we should hear from her maybe in the next couple of weeks or so to say, yeah, we had to revise our numbers once again. Things are definitely falling apart. Now, we've just entered the month of September, and this is coming out of the Economic Collapse blog, saying that September, we have now entered the danger zone. Throughout history, there have only been 11 times when the S&P 500 has declined more than 5% during the month of August. When that has happened, the stock market has almost always fallen in September as well. September is the only month in which the S&P 500 fell more frequently than it rose. What's more, in the 11 times that the S&P 500 fell by more than 5% in August, it declined 80% of the subsequent Septembers and fell an average of nearly 4%. So far, we're seeing this happen. How far can stocks eventually get? Well, Hussman, he is projecting that we could ultimately see the market decline by more than 50%. Isn't this what we saw back in 2008? When we hit highs of 14 or 15,000 points and the market came down to 6,000? Remember, the higher we go, the bigger the fall. One thing that could accelerate stock market losses this time around is the fact that people have been borrowing lots and lots of money to buy stocks. That works when the stock market keeps going up, but what happens when the market falls? Well, these are called margin calls. And banks and lenders say, we're going to be issuing our margin calls to those clients after the market has fallen. And guess what? These people have to pay up. A lot of these people don't have the money to pay up. And things get worse. Other banks sent out margin calls, including U.S. Trust, Morgan Stanley, Wells Fargo. With margin calls mucking up the scenario, spooked investors are trying to lower their leverage before they're forced to, and the boom in securities-based lending appears to be over, and the wealth units of the banks that gorged on those loans are likely to see the profits dented. Just think about all those corporations that bought back their stocks. What happens to them when the market continually goes down? Think about that for a second. They're going to be in rough times, which means layoffs, which means a complete collapse of the system. We saw this happen in 2008. We're seeing it happen right now. Now, at this point, we understand other countries like Russia, China, and many other, the BRIC nations, they're moving away from the dollar. They're doing trade in their own currency. And right now, Putin decided that he's going to move forward with an energy alliance with China, and they're going to deal in their own currency. He says, our countries are consistently moving towards the creation of a strategic energy alliance that I am sure will play a significant role in international economic relations. And what they're doing is they're preparing themselves, setting themselves up, because we understand that Russia has a lot of oil. China needs the oil. They're also going to sell this on the world market, most likely not using the dollar. And we see Putin is getting prepared to not use the dollar because he's drafting a bill that aims to eliminate the US dollar and the euro from trade between CIS countries. This means the creation of a single financial market between Russia, Armenia, Belarus, Kazakhstan, Kyrgyzstan, Tajikistan, and other countries will go ahead and use their own currency and will not use the dollar. And this will spread. They're setting themselves and preparing themselves to do foreign trade payments not using the dollar. They realize what is happening to the dollar. The dollar is collapsing. It's falling apart. It's at its end game, period. The end. This is why we see all of this happening and occurring right now. Actually, it should have ended back in 2008. And we all know that they will not give up the reserve status. They will continually prop up this system until the very end. And this is why everybody needs to prepare for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.